You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody. That rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo, coming to you one last time here in 2015 from the Options Insider Radio Network studios here in, I would usually say sunny and scenic this time of year, not so much. A little bit cloudy and overcast and quite a bit snowy and icy. Chicago. Still, though, the options mecca of the known world. We produce a lot of great content here on a wide variety of options and derivatives-related topics. And the best way to find all of it is pretty much just surf on over to our flagship, theoptionsinsider.com. And, of course, there's a lot of things you can do there aside from the radio. We're not just all about the radio here. There's great articles and analysis and breaking news from the options market, et cetera, et cetera. Check it all out. If you haven't registered for our many different email newsletters, I encourage you to do that as well. They're all free, as usual, as with everything else we do here on the old radio network. So by all means, check those out. And then, of course, you can also find us in all of our favorite areas when it comes to the radio, including iTunes, TuneIn, Stitcher, et cetera, et cetera. And speaking of the free, a lot of you people are always writing in saying, hey, you guys always give away your stuff for free, all this great content all year long. We'd love to say thanks to you guys. Is something we could buy? Is anything you sell? The answer is no. We don't sell anything. It's all free. That's why we like to give it all back to you guys. If you guys do like us, if you appreciate what we do, then by all means, nice reviews on iTunes always helps. Also, let the sponsors of our various programs know that you like them and you appreciate them, and let them know that you came to them from our various programming. Always goes a long way. So depending on the program you like, just let that sponsor know, hey, I heard about you on the Options Insider Radio Network or through the Options Insider. Thank you for sponsoring the program. That kind of stuff goes a long way with our partners and our sponsors. That's probably the best way you could thank us here at the network for bringing you a great year, 2015, full of great content. And we're scheduled to bring you even more in 2016 coming up. This is going to be our 9th year. Crazy town. But c'est la vie. We keep cranking away on the content, keep bringing you more good stuff. So if you haven't done so, leave us a glowing 5-star review somewhere in your outlet of choice and reach out to a sponsor or two and thank them for being part of our network. Your thanks goes a long way with them. All right. And joining me on the old program for this final episode of 2015, at least for the option block, I am joined from the hinterlands of Maine by a man who has no internet yet still manages to find a way to come on the program. That's his level of dedication, listeners. It is the Rock Lobster himself, Mr. Andrew Giovinazzi, from myriad different outlets, including a little thing called Ye Old Option Pit. Mr. Rock Lobster, welcome back one last time here for 2015.
It is a pleasure to be back here. On the radio show, although Maine, I see ice floating in the water. There is icy water. There is now ice on the water. First time this season.
Well, there you go. All that ice rink you've been building. Finally, you can finally use it.
Well, I can't. Hopefully, I can use it. As of right now, it's still a twinkle in my eye, so to speak.
you're in that rare position of actually wanting snow and ice up there in the hinterlands of Maine. Me, not so much. You can have all a little bit of snow and ice we're getting today, Mr. Rock Lobster. You can have it all. But a man who also probably welcomes in some snow and ice this time of year because he's the owner of many snowmobiles is none other than Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to you one last time here in 2015.
Oh, sad to see such a wonderful year end, but excited about new beginnings.
Yes, quite a few new beginnings on the horizon. And I think we'll get to those as we wind up the year here with our last trading block of 2015.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's rocking, what's rolling in ye old financial markets. By the way, I mentioned this is our last live show of 2015. Don't worry, we'll have one more show in your feed for you at the end of this week. That'll be another one of our little best ofs. Hope you're enjoying those little walks down memory lane. We have quite an extensive memory lane here on this program. I'm just trying to bring you some of the choice nuggets. Some of you guys have written in with episodes you'd like to hear us bring back. Other times our staff picks them. We have a nice little mixture there. If you have an episode you loved, you want us to bring back as a best of, let us know. We're thinking also in the new year of launching that as its own separate feed and show on the network because we do have 9 years worth of content here and quite a bit of great guests and discussions and interviews and debates and topics, etc., education, analysis, all sorts of fun stuff has gone on the network over the past 9 years. And so what better thing to do than surface it all very easily for you. We're doing it in the individual show feeds now, including volatility views in this program, but we'll be doing more of it in its own show probably. Look for it in early Q1 of next year. And later this week, you'll get another best of show of the option block. So stay tuned for that. Maybe a live show, maybe one of our other great guests or debates. I know last week we actually surfaced the one from earlier this year with right after the madness of August 24th. So a lot of great nuggets to mine. But looking towards today's activity, we are, of course, recording this on Monday, December 28th, right after the close here. And it was a bit of red on the old street today. Most of the major indices closing off fractionally on the day, about 0.25% in the S&P and the Dow and the NASDAQ off similar percentages. They were a wee bit lower. The S&P off about 11 or 12 handles lower intraday before closing right around 2056 or so. So they did rally off the lows, but still red on the screen across the board. Of course, last week was a better week overall, closing out last week, up nearly 2.8% for the S&P last week, getting some love back in the much maligned oil area as well as some raw material companies. We also saw, of course, particularly earlier this session, the VIX really gapping up. Sebastian's not here, so I could say it. About 15% or almost 15% to nearly the 18 handle. In fact, let's see how high VIX Cash got intraday here. It broke the 18 handle, 18.13 actually. So, yes, another pop-up for pop-up Monday, I guess you can call it in VIX land now. It's kind of almost such a regular occurrence. You can kind of set your watch by it. That was, of course, after VIX taking it on the chin last week, getting the market love back last week. And, of course, oil still taking it on the chin and continuing to do so this week. We had a little bit of a rally last week, now coming off those last week highs, coming off about 3% as Iran once again confirming its reports that it's going to boost exports just as soon as those sanctions are lifted. There we go, bam, off to the races. So no one seems like they have any intention of cutting any production. It's the old prisoner's dilemma, writ large there. Why would you cut production? You can make it up in volume, and meanwhile, everyone's feeling the pain as a result. Interesting stuff. So a lot to sink our teeth in. Perhaps we'll start with you, Uncle Mike Tosaw. What caught your eye in today's sea of volatility and oil, et cetera, et cetera? A lot of stuff to talk about.
I think today oil's the main story to talk about. It's an oil-driven market right now for the course of the next couple of days. But the thing to remember is that this is typically a very low-volume time of year. So when news comes out, you can get a lot of low-volume rallies or low-volume downturns, whatever the case may be. So I wouldn't buy too much if you're a longer term investor, and on this show by longer term, I mean several months out. I wouldn't read too much into what happens this week just because there's such a lower volume that's going on. What I think is going to be the big story of this week is, well, I shouldn't say the big story, but what I'm focusing on, what I think a lot of people are focusing on, is if the S&P is going to end up positive or negative on the year. Right now, this has been the most exciting road to nowhere from a long, long time for the marketplace this year. We've had a lot of headlines that have happened over the course of this year, which I'm sure we can talk about a little bit today. But the fact that we're pretty much right back to where we started a year ago it says a lot for both the bulls and the bears. The bears would say, well, come on, market, if you're not going to do anything and you can't do anything after these long rallies with which you had, then the bottom's about to fall out. The bulls, on the other hand, would say, well, look at all the bad things that have happened so far this year, and flat is the best that you can do, bears. We're going to rally to new highs next year. So we're very much at the precipice, but we've been there for about 12 months now. So I wish it would do something already.
Yeah, it's kind of been that will they, won't they year. It has been the most Sturm und Drang we've seen to go net nowhere, very close to it, that I've seen in quite some time. It's kind of that old argument of, your frame of reference and how you look at it on the market. If you looked at the market just a year open to year close, you'd think it was a pretty quiet year, and yet that really belies all of the drama we had going on in between those two different data points. We still got a few days left to see how we wind up here. It could be a massive sell-off, could be a massive rally to cause the year to end up in one direction or the other. But still, it's kind of crazy to see where we are and all the things we've gone throughout the year to end up not that far away at the end of the day from where we set off this crazy mad journey back in January. Mr. Rock Lobster, as long as the internet gods are still smiling on you over there, what caught your eye in today's activity?
We had, I thought, a pretty good markup in VIX for the 3-day weekend. And even with the VIX up, the futures closed down just slightly. The VIX futures closed down. So there wasn't a lot of, while there might have been a small amount of appetite on the oil sell-off early this morning, the bid for volatility slowly kind of fell apart. I mean, we're still trading at a fairly pretty I mean, I can't remember. I guess last Christmas we did have a higher, but 17 volatility with a weekend between the holidays, it's quite a bit. So you had the reset after the weekend, which wasn't that big of a deal, but pretty much since the first 2 hours of the day, the VIX cash never really kept their bid and dropped about a full handle, I think, from the highs. So I'd be surprised if the cash caught a bid through the week. And I have to agree with Mike. Really, the only thing is uncertainty about oil and what that does to the high yield market and how that bounces off everything else. And that, I think, is kind of the story. And a little bit of a rally in the treasuries as well. So there's not, you would think with interest rates it's supposed to be going up. If you look at kind of the trajectory of, it's like the HYG. We were looking at this morning. And that's kind of peaked in 2013 and has since just, for the most part, been going down. Treasuries have not actually done that. They've hit some lower levels, but have rebounded smartly even with this thought of rates going up. So I still feel like there is a demand for safer assets. The U.S. having $10 trillion of debt notwithstanding, there is still a bid for treasuries out there. So until that really subsides, I could see us rallying a little more. It seems like the old connection. So, you got people are reaching for bonds and equities they're selling equities, but it's a tougher spot now because we have high equity prices and, relatively high bond prices and low yields. So it's sort of it's hard place to kind of figure out where to put your money. So I think, and not everybody's ready to dive back into oil stocks and commodity stocks yet. So there's some, wherever we are, we're still at an odd place trying to sift through all this QE. God knows how many years it'll take. But I think that's kind of the new our new regime for 2016 will be, what do we do past QE? And I think at least of the last week's action, we haven't gotten any good answers to that yet.
No, the questions still remain on the horizon. Speaking of questions, one of the ones we get a lot here, and we received a lot throughout the year, and we get a lot at Options Insider, is when's the best time to buy options during the week or trade options? And we've said before, and today is obviously an extreme example of it, but it seems like one of the more reliable type trades. It certainly was pretty good beginning of the year. Then it seemed like it may have faded a bit, but today's a pretty strong example of it yet again, of that old that old chestnut we were bouncing around a lot here on the program, Andrew and Mike, of just taking advantage of all these crazy people flooding to the exits towards the end of a Friday going into a weekend, certainly perhaps on a holiday weekend. And at the very least, maybe you get a nice free weekend out of it in terms of swinging for the fences there. Something crazy happens on the weekend. You get a nice pop in vol that you could take advantage of. Or on the Monday, usually, all other things being equal, usually you get at least vol remains firm. Sometimes it pops a little bit and you get a chance to get out around the level you bought it at. Or you get a day like today where vol pops in the morning and you get a nice little boost. Is that still one of your reliable go-tos as the year winds to a close here? Mr. Rock Lobster kind of taking advantage of the mass stampede for the exits. People wised up to that trade for a while and it wasn't really there anymore. Now towards the end of the year, it seems like that cycle is kind of coming back a little bit.
I'm not a fan of just selling options blindly on Friday afternoon, at least.
No, clearly not.
It's not a trade. Sometimes it's interesting. I don't think we looked at anything in particular. We looked at volatility in the treasuries, but there wasn't, I would say that is and I think it's really a function of what happens during the week. You might see a trend for volatility and taking the weekend out by, midday Thursday. And if they continue it, you'll know that volatility is getting very cheap for an entry point, which that definitely that has made for some nice time spreads and things like that in the fourth quarter that we looked at. But overall, I say you could use that as it's something to keep an eye on if the opportunity presents itself.
Yeah, it was definitely better when the weeklies were new and it was just kind of hit the bid on every weekly as soon as they were listed around that Thursday time frame, and then just you could ride some decent deals going into the weekend, particularly if you waited a little bit. And then you got that nice pop always on Monday. It kind of faded a bit as the market wised up to that pattern. But who knows, now towards the end of 2015 into 2016, that may be rearing its ugly or interesting head, depending on your viewpoint here, as we go on to it. Speaking of going on, it's time for us to keep on going right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, one last time here in 2015 for that funky tune to take us into the realm of the dubious, the downright bizarre, the sometimes just weird and twisted paper that is catching our eye in a segment we like to call around here the Odd Block. And we're kicking things off. If you're kind of done with us talking oil stocks, we'll kick you off in a different realm. It's roll time. It's that time of year everybody wants to roll and get their positions and move them from one month to another, and sometimes back and forth and up and down the strike chain. We got a lot of that going on in today's Odd Block. Going to kick things off, actually not in energies, but in the realm of cruises. In particular, good old Royal Caribbean Cruises, ticker symbol RCL. We've checked in on this name and a few other cruise line names throughout the course of 2015. They were not frequent offenders, I would say, but once in a while popping up on our radar here on the old Odd Block. And this one trading today, closing right around the 100, even handle $100 and about 32 cents or so. This is the name that does about 2,600 contracts a day, doing nearly 10x that, nearly 23,000 contracts going up today in good old RCL. And like I said, it's roll season, and the rollers were out in force out here in RCL as well. We saw the old Jan Par Feb 105 roll / call spread going up. Paper, it looks like selling Jan, buying Feb, doing it a total of about 10,000 and change on the Jan pars. And let's see, what was the total? About 10,594 on the Feb 105s. Doing it all for about 34 cents to buy the Feb. Went up in 2 blocks up there on the old Amex. Again, open interest, pretty sizable on the Jans, about 11,000 and change. So pretty strong indicator that this is a close in Jan, selling to close, and then rolling up to the Feb 105s. Again, this name closing a little bit north of the par strike today, so not perhaps the worst roll for these guys. And of course, they're looking to keep the bullish dream alive, moving on out 1 month and 1 strike and saying, you know what, we want this baby to continue the rally ho chain. And looking back at this one, just about a week or 2 ago, this thing was trading sub 95. So this thing's up about 5 handles in the last week or so. So not a bad run for this one. I don't think these call holders are too sad to watch, to let these ones go and keep on rolling on out to the 105 handle. And again, looking back, about a year or so on this one, 105 seems like it may be a bit of a stretch. This one has been sub 100 for the better part of the last year, with a few brief flirtations over 100, including today. Other than that, sometimes it was substantially lower. It got down to about this mid 60 handle in May. So this thing has been on quite a run, up, not quite doubling, but doing a fair rally over the past 6 months or so. And our friends out here saying, keeping the dream alive, going on up to the 105 strike. Mr. Rock Lobster, what do you have to say to our friends here who, like the Jeffersons, are moving on up and out this time to the Feb 105 calls?
Well, this one was a little odd because it looks like somebody closed the Jan pars for money, because they sold them through the bid at the time.
This thing's been rocking and rolling all week, so it wouldn't surprise me if they're sitting on some money there.
I would think so, and then rolling up. So, I mean, or you could take the opposite view and said, well, maybe they're trying to roll for. They're trying to roll up a strike and close a short call and buy and then close a short call and then go out and sell the next call, which would be pretty favorable pricing to get that done. So I found that one tougher because they would have had to give away 4 cents there. And I don't know. It looked like a difficult. It wasn't an easy one to totally call because they traded all those Jan pars mostly through the bid at the time. So I'm guessing, somebody had to sell them down and then they got a break on the purchase price going forward. So I think either way could be plausible, but the recent rally certainly made them have to, it looks like, close some options prematurely, one way or the other. So
I'm going to give them the benefit of the doubt in saying that they're sitting on some happy profits, and they're happy, laughing all the way to the bank. But you're right, it was a bit of a funky execution because 9,100 went up, then those got canceled, then another 9,100 went up later, but that was already through the bid at that point. So the pricing, the execution was a little bit funky. They were already 262 bid when they went up at 258 a little bit later, another 9,100 block. So the pricing got a little bit screwy. So it could indeed be the way you laid it out as well. I'm going to be charitable to our friend. Here's that time of year. It's the holiday season. Let's be charitable. Let's assume everyone is up to good business and is making some nice money as the year comes to a close here. So we're going to assume our friend sitting on some hefty profits on those Jan pars and doesn't mind hitting the bid, or in this case threw it a little bit to get his business done and move on out to the Feb 105 strike. And since we're talking rolls, let's talk some more rolls. This time a little bit more of a funky one, and hence its inclusion in the odd block. He's not doing the way you would normally roll in a case like this. Usually you'd probably roll from the Feb 40 strike to the April 45. Our friend out here in Franklin Resources going the other way. Of course, ticker symbol BEN, B-E-N, Ben Franklin. Get it, listeners? About $36.92 this one closes at today. Pretty much unched on the day, so it wasn't a big underlying day that drove a lot of volume out here. This name doing about 2,000 contracts a day, doing over 15,000 today. The lion's share coming in this pretty sizable roll for this name. doing it 1 by 2 for a total of 15,000 contracts. So there you go. Pretty much all of today's paper, with the exception of a few 2 lots and 6 lots and 120 lot and 150 lot coming in this pretty sizable roll. And like I said, it was the Ben April 45 Feb 40 call spread, going up for 36 cents, 5,000 by 2,000 when we first started noticing this one, first hit our radar. But as the day went on, the size of those April actually increased to about 10,000. So it actually going up 1 by 2. Looks like paper selling April and buying Feb. There's size open interest on the 845 strike, over 20,000. So it looks like, and there's pretty much negligible open interest on these Feb 40s, only 30 contracts. So this is clearly open on the Febs. Looks like we had a friend here getting a little bit optimistic, swinging for a few fences here, perhaps loading up, some may say overloading on these 845s, and now today perhaps deciding discretion, the better part of valor, deciding to move to a little bit more relevant strike, and the Feb 40s fitting that bill, and also deciding to get a little bit closer to home. So going Feb rather than April, because the Febs are about a 50% discount to the April 40s, I'm assuming. This guy being a little bit price sensitive, his first trade having not exactly probably gone his way. So looking to reestablish, giving himself less time to work with now, but a more relevant strike. And again, doing it about 1 by 2, 10,000 by 5,000. There is 20,000 open on this strike, so it could be he has more to go, but I'm guessing this guy's burned through a lot of capital already. Doesn't have a lot left to burn. Throwing it after some more crazy Feb 40s. Looking back here on the year that was for Ben, and the chart at least may be a bit favorable for this one, because this thing was flirting earlier in the year in Q1 into early Q2, well north of the 50 handle. So our friend here with the 40s may not be as optimistic as it appears on the surface. Of course, recently this stock has been south of 40. I think it was above the 40 handle early December 1st or so. Then it pretty much hasn't really looked back over the last few weeks. Our friend here saying, you know what? It's poised for a rebound. Mr. Rock Lobster, walk us through your take here on this 1 by 2. I guess you can call it a reverse roll from it's the in and down as opposed to the up and out here for Franklin Resources.
Yeah, again, like pricing in the middle, pricing favoring the closing the 845s, and buying some of the Feb 40s. Real, I don't know, all I could say is it's still kind of a strange trade to me, because they reduced the volume by 50% on the roll.
That's what happens when you get burned.
Usually, yeah. We've seen this time and again, mostly when the volume drops by 50%. It's somebody bought some calls, okay, hoping for maybe the Santa Claus rally, doesn't materialize, and they're selling the calls and rolling lower, but they can't buy as many of them, which is what the trade looks like. And as you see, priced on the marks looks kind of how it would go up. If you wrote the April 45s, let's say against a stock position, and you close them, now you're rolling down for only, 20-something cents worth of premium? I don't know if that makes a lot of sense to roll down on half the options for just 26 cents. Maybe it does to the customer, but I don't know where they sold the April 45s for. I was trying to look back and see if I could see some near history on it. It wasn't easy. So, but for the most part, I just think the 45s didn't quite work out. They closed what they could, and they're going to give the Feb 40s a shot. So, kind of a hope against hope that Franklin Resources sort of sees the highs that they have reached this year. I mean, it was a $50 stock for most of the year, and then it just ain't anymore. Yeah, I guess is the easy way to describe it.
It could be over optimistic, could be throwing some good money after bad. We'll keep an eye on this one, listeners. But never a good sign when they're closing out and doing half again on the cheaper option. Probably a good sign that they burned up some capital in between there. But who knows? Maybe Franklin will rally, and these guys will live to fight another day. As we move on to our final name, going to flip the script a little bit, going on out to the online real estate realm. This is Zillow. Ticker symbol Z. You guys know these ones probably. If you've been driving past a house you thought was interesting, you want to look them up online, see how much they cost. Zillow is one of the services you could do to do just that with their Zillow estimates of nearby house prices and things like that. Of course, closing today just a little bit shy of the 24 handle, off about 50 cents, close at $23.95. So that's about a 2% move for this name today. So outpacing the market to the downside. Some of that could have, of course, accounted for what we saw out there today. So the name that does, on a given day, about 2,700 contracts a day, doing about 7,600 today. So a fair premium, and about 77 to 1 puts over calls out here today. That should give you some indication of where our paper is leaning today. And to find today's activity, not too hard, just scroll on out to the one strike with all the action, and that was the Jan 22 puts. We saw someone out here just drawing a huge line in the sand here on this 22 strike in January. It started off with about 3,800 of them going up, paper selling for 25 cents in one block over there on the Philly. As the day went on, about 2x going up, a total of 6,709 going up on that strike, with the latter kind getting sold all the way up to 40 cents. That's a pretty good fill. They went up 25 at 35. They went out, 25 at 35 at the end of the day. So that 40 cent kind is a good fill. And again, this looks like pretty aggressive paper, as these guys are saying, hey, this thing dips below 22. I want myself some of this. I want myself some of this Zillow. And looking here at the chart going back about this one hasn't even been rocking and rolling that long, so I can't even go back a year. I can only get about 6 months on this one. And this one briefly had a brief flirtation with 34, and then pretty much hasn't. That was back in, looks like about early Q3, early October. And then it pretty much never looked back. It's pretty much been straight down ever since, hovering right around the 24 handle for the last few weeks. Our friend here decided, you know what, if this thing gets to 22, I want some of that. Mr. Rock Lobster, what's your take here? Our final live odd block, victim, celebutante, debutante, debonair, call them what you will here on the old odd block. Someone saying they want to buy themselves a lot of Z south of that 22 handle. What's your take here?
Don't you think this was an aggressive sale? I mean, they kind of hit every bid there was for these.
Well, they started off hitting the bid. They got some better fills later, but you're right. The initial kind was whack right on the bid.
They just kind of sold them. I don't know if it was a newsletter trade or not, but somebody wants to own the stock at $22 or 22 and a half or a little less. So, given the way the market's just been kind of having that little drift lower, I thought this was a bold way to make a quarter. Let's just put it that way. I mean, they're trying to pick the lows. I think there is a little bit of hunting around for stocks that are trading at the lows at the end of the year that could find their way back into some portfolios, maybe with some tax selling. But I mean, 22 and a half is pretty much, that would be the low tick of the year. And I guess that's good enough for some people,
I like that. A bold way to make a quarter. We may have our episode title here. As we keep on rolling, it is our final Monday segment. I wouldn't send you off into the great beyond of the new year, listeners, without one final check-in with Uncle Mike himself. So without further ado, let's keep on rolling into our final strategery block of 2015.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody. This time, one last time, you guys know the drill. You've been sitting through us all year. You know what happens on our Monday shows. It's time for Uncle Mike to come on down from the old mountain, grab whatever passes for a mountain out there in St. Charles, grab some stone tablets and perhaps a bubble pipe and a nice warm smoking jacket, a nice warm roasty fire today because it is a wee bit chilly, and dispense some options, wit, and or wisdom. Uncle Mike, we're coming up against it, our final live episode here of 2015. What wisdom do you like to leave our listeners with as we close out this year here?
Well, what I want to go through today, it's not a specific option strategy per se, but just the way with which I would advise evaluating your overall financial portfolio. This is the way that I do it for myself. This is the way that I think you may want to consider doing it for yourself. This is how I do it for myself, my clients, and this is just the way with which I like to look at things. And this is what I would recommend doing. This time of year is when you can look back and say, okay, this strategy worked well, this strategy did not, this investment worked well, this one did not, and this is what I think I should do with my money. Now, I think that there's a variety of things with which you should do and should not do. Let's start by your banking / savings. If you are a business owner, I think this is the time of year, and not necessarily because there's any advantage or disadvantage, but I feel this is just a good time to kind of do everything, because typically a lot of businesses and markets are a lot slower this time of year. So as a business owner, what I'm doing myself is that I'm looking to see if I want to get more of a business line of credit, if I want to shop it around to see if I can do that. Now, I don't really keep a lot of debt within my business, very minimal, if any, quite honestly, but it's one to where it's good to have a business line of credit should you ever need one. Getting the best rate for it and finding the best banking situation, I think, makes the most sense. And this is the time of year with which I like to do such things. If you are not a business owner, this is a time of year with which, if you do still have equity in your home, depending on when you bought your home, you should maybe consider a home equity line of credit. This is the time of year to shop that around to see if it works best, to see what would work best for you. This is the time of year to consolidate debt, to come up with a debt pay down plan should you have any. Now, from an investment point of view, I think this is the time of year with which you look through each individual section of your trading. The speculative section, meaning if you are looking to do some type of a straddle going into earnings, or pick a side going into earnings and buy a call spread or buy a put spread, whatever the case may be. Your record was 34, 24, and 0, or your record was 1, 8, and 4, whatever the case may be. Calculate your win-loss records, and also, more importantly, calculate how much money you've made or lost on it. One thing that I always tell people is that you can be right 90% of the time and still lose money, but you can be wrong 90% of the time and still make money. The point is if you're making money or losing money on your trades. Now's the time of year to evaluate such things. Now, from a longer-term investment point of view, for those of you like myself that are long-term bulls, well, quite honestly, it was a very boring year if you go just from start to finish. But right now is the time of year to determine what worked for you. Did you buy too much premium this year? Did you not buy enough premium? Did you sell too much premium in low vol environments? What worked? What didn't work? What are you looking to do in the future? What's your sentiment over the next 5, 10, 20 years? And what are you going to do over the course of the next year to exercise that specific sentiment with which you have? Me personally, I do think that over the longer term, I think oil is a good spot to be. Not necessarily in the near term. I think there's a lot of uncertainty to go along with it, but I really do have a deeply held belief that oil is closer to the bottom than it is to the top. So because of that, one thing that I'll be adjusting in my portfolio and some of my clients' portfolios is we'll be adding even more XLE to it as a longer term holding. So what I would recommend doing is taking some time this week and making it a regular thing in the years to come, and evaluating everything from your CDs all the way to your call spreads. And that is the strategy block for today.
I already burned my CD collection to MP3 a while ago, so I think I'm good there. But thanks for the advice, Uncle Mike.
You already made the evaluation. Very good.
All right. Good year-end stuff, as always. Since this is our final live program, live to tape anyway, for 2015, I thought I'd give you guys a chance to shine on the network again as well. So without further ado, let's keep on rolling into our final mail block for 2015.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you guys know the drill. Maybe you can come up with some questions. You'll listen to some of our archive stuff. as the holiday season is unwinding and you're enjoying your eggnog or your champagne or whatever festive beverage you're ringing in the new year with here, and you're going to listen to some great quality options content. Maybe you have a commute or maybe you're going somewhere on a trip, and you'll come up with some questions. And how do you get those to us? Well, no shortage of ways for you guys to do just that. Probably the easiest way, surf on over to our flagship portal, theoptionsinsider.com. Use our website feedback form there, or just leave a comment on one of the show notes, and we'll get it to the appropriate show. Of course, find us via email, questions@theoptionsinsider.com, twitter.com/options, facebook.com/theoptionsinsider, or find us on StockTwits or The Options Insider, or wherever else, whatever other platform you like to use. Chances are we're probably there, even though Twitter seems to be the big driver for a lot of you guys these days. And first off, we got a question here. It comes in from Nelson L., and he wrote in with a specific question. And I know from experience, whenever one person has a question they write in about, chances are that's indicative of quite a few others out there also having a similar question. And I actually can't answer this one because I wasn't on this show. He writes, this is a question for Andrew from Maine. During my morning run yesterday, I was listening to episode 484. At the 14-minute, 10-second mark, and I appreciate the specificity of that. That helps us. He says, Andrew mentioned a strategy that the end result was that money from one IRA account was moved to a different IRA account. I listened to that portion of the podcast a few times, but just could not quite understand the strategy. Could you please help me understand the strategy? He gives a bunch of ways you can contact him. I won't read those for his own protection. And he says, thanks for any help you can give me. Also, thanks so much for the podcast. I traveled 30 minutes each way to work, and it is very educational. Thanks, Nelson. Well, thank you, Nelson, for writing in. And I'm sure you guys, Mike and or Andrew have already responded to him. But I wasn't on this show, so I can't really give him an answer. But Uncle Mike and the Rock Lobster, you guys were. So who wants to go first and try to explain this particular strategy to Mr. Nelson L.?
Well, I can take this one, Mark, and I don't know if it's necessarily a specific on-purpose strategy, but when Andrew and I were doing the show, we were going through a trade, the odd block, to where there was, if memory serves, there was a lot of puts that could have appeared to have been a protective put strategy, and we thought it might be a closeout of some sort. So let me give you an example of something that I've done with a client that might be something similar as to what could have been done within the strategy on the strategy block. I'm not 100% sure this is the exact one, but I'm pretty sure it is. So, for example, I have a client that came to me with an annuity that had a lot of had a low cost basis. So I couldn't take any money out of the annuity. Normally annuities aren't my first choice with things. They have their place, don't get me wrong, but it's a specific tool, and I would say maybe 2 to 4% of my assets under management is actually in annuities. But with this specific client, we couldn't take the money out of the annuity, so we did a tax-free 1035 exchange from one annuity to a fee-based annuity, something that the fees on it it was a very large sum of money, was like $20 a month, as opposed to several 3 to 4% like what a lot of annuities are. So with that, we have that money sitting in an index fund. Now, this is just one piece of a much bigger puzzle. We're not putting all their money exposed to the S&P 500, but with this section of the annuity, let's say it's in the S&P index fund, where their annual fee is the $20 a month plus 0.07% plus the fee that I charge. So it's very minimal. And so within that, the annuity has gone up since we put it in there because the S&P has gone up since we've been using this. But what I've also been doing for this client is doing a hedging strategy within another traditional IRA. So as the annuity has gone up, the traditional IRA has gone down in value, which is fine. That's what we're looking to do. But here's the strategy in terms of how this is working and what made me think about it for that specific trade. The annuity has tax deferral just like what an IRA would. However, the annuity, because it's outside the IRA, does not have RMDs, required minimum distribution. So the client is turning 70 and a half next year. And normally she would have to take money out of her IRA just because it's the law. You have to. Otherwise, there'll be penalties and the IRS comes to get you somehow. I don't know how, but maybe they come and send evil men in a truck to come and just beat you up. I don't know what the IRS does. But anyway, you have to do it. So what we did was as the put options within the IRA were losing money, we weren't just doing puts, we were financing them and doing all sorts of things. But when you have the bull market we've had the last few years, and the sideways market of this year, it's obviously hedging's not going to be free. I'll do my best, but it's never going to be free. This IRA essentially has blown out, but I'm okay with it because we've obviously done well on the index fund within the annuity. So now the client still has tax deferral. The client will still be able to pass her wealth along to her children within this annuity. They can stretch the annuity. They can do a variety of things. They still are in the same boat. But now, since the IRA is no longer, it still has a little bit of money in it, but it's very minimal. The client does not have to take RMDs. And so what we've essentially done is taken money out of the IRA and made it so that we can avoid the RMDs. Now, this wasn't the original plan, because if the market would have gone down, then of course the IRA would have gone way up and the annuity would have come down. But in that case, then maybe the annuity would have gone below the original basis and we could have done some other things. But either way, it's kind of like an either or type of thing. If this happens, then this is how it'll work out. If the other thing happens, this is how it works out. So getting to how this related to this question, let's say someone has XYZ stock in a non-IRA account, a non-qualified account, and they also have an IRA to where they have a bunch of put options in it on XYZ stock. If XYZ stock goes way down, then what they're able to do is lose money outside the IRA, which they could claim a loss on. Now, I know there's only certain amounts you can claim losses on, but they could lose money outside the IRA, and the puts go way up, let's say. You've essentially found a way to take money out of the IRA and put it into the IRA by having it set up that way. Now, is it this simple? Good gosh, no. It does not work this simple in everyday real life. But what this could do is, what I do want to emphasize on this, is that you can plan for an either-or type of scenario, and it'll never work out exactly the same clean way with which you want, but make it so that one thing works one way outside the IRA, change it another way within the IRA, and you have the potential to essentially move money into or out of an IRA depending on how you set it up. Once again, this isn't an on-purpose strategy with which I do, and I don't think it should be, but if it ends up a certain way, you can adjust to it and just redo things the way with which you want to have it set up.
All right. Well said, Uncle Mike. Mr. Rock Lobster, since this was addressed to you, anything you want to add there to Uncle Mike's explanation?
I think the guy actually meant for Mike. But you know why? It's because we both live in the sticks to some degree, so it's easy to confuse us.
After all these years, you're still interchangeable to the listeners.
Well, that's what can you do? What can you do?
Claim
I don't really.
That's what I do.
I don't have anything interesting to add, but as Mike would say, use the rules how they're designed to try to maximize the benefits coming from your retirement account. So Mike is clearly the guy to talk to about that.
Well, there you go, Mr. Nelson. If you have any questions, reach out to Uncle Mike, and he could walk you through it all in much more detail. Meanwhile, it's time for us to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
And I have a little tear in my eye I have to wipe away here as this final Around the Block segment for 2015. The year draws to a close here, and as we look ahead, not a heck of a lot really scheduled, surprise, surprise, for the final week here, the final calendar year week of 2015. Not a lot of big quarterly reports, not a lot of big earnings really to come this week. Most of that's starting to start kicking off in mid-January. Really no one of any sane mind scheduled anything significant for this week from a markets perspective. There's a few numbers. We got jobless claims on the 31st and a few others, consumer confidence, etc. But nothing really earth-shaking, nothing really market-moving. Maybe Mr. Rock Lobster, we'll start with you. Are there any hopes you have here for some vol injection towards the end of this week, any other big events. And also we should mention, Uncle Mike mentioned at the top of the show, but this is generally a pretty thin week, all things considered. No one's really playing. So if something does happen, things are going to move pretty quick. So be prepared for that on this final week of the year. That said, Mr. Rock Lobster, what are you keeping an eye on for this final trading week of 2015?
Well, Option Pit only has really half days. We not even half days. Just we kind of open up our room in the morning and discuss a few things that might be interesting. But yeah, it's thin trade. There's not a lot of news. The whole reason why is most of the market is taking the week off because the other 51 weeks a year we work. So traditionally, this has always been kind of a quiet week for me. And the only thing that I think that is kind of that the oil market thing is still a little troublesome. So if oil really doesn't do much, I don't see the market doing a whole lot. There was a slight capitulation. I'm not going to say capitulation, but volatility lost a little bit of a bid today, and we'll see if it continues tomorrow. That's the key. If we don't really do anything, somebody's sitting on some decaying options, and after a while, they're going to not want to do that anymore. So they will sell them.
You know, it's funny on the oil front. I was chatting the other day with one of our frequent guests on the network. Hasn't been on this program, I don't believe, on some of our other programs. Pretty sophisticated trader in his own right, and he was kind of echoing the same lament I hear from a lot of very basic retail traders of like, when oil was above 100, all anyone could talk about was how damaging it was to the market. And now that we're below 35 or somewhere in the 30 handles, we're talking about how damaging it is to the market. So no one can make up their minds. And I had to kind of chuckle at that because everyone kind of shares that sentiment of make up your mind here when it comes to oil. Is it bad? Is it good? Let us know. But this kind of back and forth is a bit maddening for everyone in between. That said, Uncle Mike, what are you keeping an eye on for into this final week of 2015?
There's not a lot going on this week. I think the main thing that I'm looking at, I want to see if the S&P is going to be positive or negative on the year. That'll be determined over the course of the next 3 days. So we will see.
And there you go.
And we will see indeed as we wrap up this final episode of 2015. That music means that's all the time we got for this episode of Ye Old Option Block here. It's been a great year. We appreciate all you guys joining us on the program. Looking forward to a lot more Option Block fun in 2015. There are big 500th episode spectacular sometime on the horizon there in Q1, I believe. So look forward to that. And before we go, one last check-in here with my cohorts here on the old All-Star panel. Starting off with you out there in the sticks number 1 out there in the sticks of Maine. Mr. Rock Lobster, what can we look forward to in the realm of the pit here in 2016?
We're going to do a lot of Saturday classes. They're going to be a lot. We're asking our regular option pit clients stuff that they want to see. And we will telegraph out our classes to people that are interested. We also have our store open for people that want to put some learning on trading options. You can just buy individual courses, download and take them. So that's the kind of stuff you'll be seeing from Option Pit. As apparently the educational part of our business, surprisingly, is yet a year without any returns in the S&P. And, a lot of our option strategies seem to have done okay. So it's making people look at us. The best thing for us is a flat market. So because that's usually we can find places outside of the ordinary to do things. So, and that's... And I think, again, without QE, the upside is going to be muted again unless we have some fantastic technology explosion somewhere. And we kind of had that really already last year. So, I mean, the big stocks, Google, Facebook, Amazon, and Microsoft, huge part of the Qs really led the rally because Apple didn't do anything. So, and I don't know if they have that much in them for next year as well. So. But again, option strategies, they still can pay even in a flat market. So
I somehow think you guys would do all right even in a protracted down market as well. It usually brings people to the religion of hedging at the very least.
It does, and it also because we try to come up with hedge strategies that are financed as much as possible. Sometimes you can do better than finance, depending on how much movement there is in the market. But that's when the market's moving, it's okay with us. When the market's not moving, it's okay with us. So But people don't care when the market's returning 30% a year if you just plop it in the S&P 500. This is a little bit more of an awakener for folks.
Yeah, I hear you. And speaking of awakening, Uncle Mike, what do you have that can awaken our senses, uplift us, awaken our listeners here as we move on into the new year? What can they look forward to, sir?
New Year's resolution, people. Call me. It's January, 312-212-3531. Start the new year off right with a portfolio review. Or send me an email at mtosaw@rcmfs.com. Information on the book should be available to the listening audience on our next show next week. Happy New Year, everybody.
There you go, listeners. Uncle Mike is kind of like, he goes well with all those New Year's resolutions. You want to get your health in order. You want to get maybe your diet or your weight in order. You want to get maybe your career path in order. It's a time of the year for getting things in order. And what's more important to get in order, aside from your health, of course, but for your family's finances. So give a guy like Uncle Mike a call. He can walk you through some of those strategies like he was talking about earlier with trying to arrange and trade between an IRA and some other, which is a question we get quite a bit here on the network, how to manipulate and maneuver between those two very different accounts. He can walk you through that, and it's always nice to have somebody in your corner, perhaps babysitting those puts, rolling those calls for you on the days when you have to take care of your day job or your kids or whatever else it is you do all day long. You have stuff to do. Let Uncle Mike do the rest for you. Let him stay up at night worrying about the theta decay and how to pay for it. That's his job. That's what you're paying him for. So give him a call, shoot him an email, let him take the worry off your hands. And of course, if you want some good edumacation while you're at it, then surf on over to the boys over there at optionpit.com. You could do far worse than check out some of their webinars, and they have a great store for you now, so you can check it out there as well and check up on any of the archived episodes and webinars you may have missed in 2015. And on behalf of the Rock Lobster and Uncle Mike, and of course the Greasy Meatball and all the rest of our guests and contributors and co-hosts who appeared on this program throughout 2015, we want to thank all of you for helping to make such a great program. I'm looking forward to many, many new fun, exciting episodes and new ventures and great stuff looking forward to here in 2016. Don't worry, one more show coming for you this year. There'll be another best of, so look forward to that, and we'll be back here with more live episodes here of The Option Block in 2016.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.